The hype cycles and meme coins are losing steam. What's truly moving the needle now is utility, enterprise demand, and serious capital. And at the very center of this revolution are two names you might hold right now, HBAR and XLM. But there's a critical, urgent warning: you better see this before it's too late. Welcome, forward thinkers. Today, we're ripping back the curtain on the silent revolution happening with HBAR and XLM. These aren't just altcoins, they're infrastructure-level plays, building real-world integrations while the rest of the market chases casino tokens. And they're finally waking up. We're going to break down the undeniable fundamental shifts that the smart money simply can't ignore anymore. You'll discover the catalysts that have just lit the fuse for both HBAR and XLM, and why you better see this now. But more importantly, I'm going to arm you with the urgent truth you need to act on, before the easy gains are gone, and before the crowd figures it out. This isn't just about making money, it's about protecting your future. Just recently, HBAR sent shockwaves through the market. A major listing on Robinhood, with its 23 million users, lit a fuse. Within hours, HBAR became the #1 gainer among the top 20 cryptocurrencies, leaving even Ethereum and Solana in the dust. That wasn't random. That was precision timing. Meanwhile, XLM quietly dropped a high-efficiency upgrade, Protocol 23, enhancing scalability and smart contract performance. The result? Institutional wallets quietly bought up over 400 million XLM tokens in just a few weeks, without a whisper on mainstream headlines. This is where the crowd starts waking up. Too late. But what's the real reason these two assets are moving now, and what does it reveal about the structural rotation of capital that you better see this to capitalize on? The Robinhood listing for HBAR on July 25th wasn't just a retail bump, it was a catalyst. The rail fuel was already stacked. Months of silent accumulation, quiet infrastructure upgrades, and institutional desk flows were building pressure under the surface. Robinhood just lit the match. We saw HBAR skyrocket to the top, becoming the #1 daily gainer among top cryptos. This wasn't hype-driven, it was capital structure shifts. On-chain proof is undeniable. Open interest in HBAR futures surged past $450 million, the highest since January 2025. This signals serious players, hedge funds, market makers, quantitative traders who play for ROI, not fun. For XLM, Protocol 23 was the quiet unlock event. This wasn't a cosmetic update, it was the foundation for enterprise-grade finance. While they didn't hype it, the smart money moved. Wallet analysis from July showed over 400 million XLM accumulated by institutional and long-term holder wallets. These are not meme traders. These are wallets tied to OTC desks, enterprise nodes, and fintech-backed custodians. They know what's coming. This silent, calculated accumulation by institutions is why you better see this and understand that this isn't just another cycle. Beyond these initial surges, both HBAR and XLM are positioned at the epicenter of two of the biggest financial transformations happening right now: central bank digital currencies, CBDCs, and the tokenization of everything, real-world assets, RWAs. What if I told you that both Hedera and Stellar are already deeply embedded in pilots and projects that are literally shaping the future of money itself? And what if their role in these multi-trillion-dollar revolutions is the ultimate, unstoppable force that makes them essential holds, forcing you to realize you better see this for your financial future? Because their quiet dominance in this space is about to go mainstream. Hedera isn't just talking about CBDCs, it's doing them. Case in point, the RBA Acacia pilot in Australia, a live central bank digital currency initiative, is already leveraging Hedera's tokenized asset issuance and smart contract-based settlements. This is CBDC infrastructure in the real world, not a theoretical roadmap. Hedera's unique hashgraph technology, with its finality in seconds, 10,000 plus TPS, energy efficiency, and regulatory-grade architecture, makes it the perfect backbone for governments and banks moving towards digital currencies. From carbon credit markets to fractional real estate, HBAR is showing up again and again as the chain of choice for tokenizing real-world assets. Meanwhile, Stellar XLM is positioning itself as the default smart contract rail for compliant tokenized finance. MoneyGram's global ramp integration is live and expanding, giving Stellar real reach into 180-plus countries with fiat to crypto and crypto to fiat capabilities. African mobile corridors, particularly in Nigeria, Ghana, Kenya, and South Africa, are actively piloting Stellar rails for remittances and microfinance. Even the UNHCR continues to use Stellar-based aid disbursement, quietly onboarding the next generation of wallets and recipients. This isn't speculative. This is real economic utility right now for both HBAR and XLM, compounding daily, and why you better see this now. Now, let's talk next-level analysis. Forget human emotion and biased predictions. What happens when artificial intelligence, trained on massive price datasets, technical indicators, and market behavior, makes a forecast for HBAR? What if a leading AI model just predicted a near-term target that sounds outrageous, but historically, AI tends to underestimate? And what about the long-term macro targets from top analysts for both HBAR and XLM? Targets that would change your life forever. It sounds too good to be true, right? But to dismiss it means ignoring the very data that drives smart money. And if you hold HBAR or XLM, you better see this to understand the true scale of what's coming. The Grok AI model, trained on massive price datasets, recently published a new forecast for HBAR. Its prediction: if momentum continues at the current velocity, HBAR could hit 45 to 65 cents by late August. Let that sink in. This isn't a human wish, it's a data-based projection. And historically, AI models like this, especially when paired with strong fundamentals, tend to underestimate. Technically, HBAR broke out of a double-bottom structure, reclaimed the critical 23-cent level, and pushed straight into its long-standing resistance zone. The next move, if volume holds, is a clean break towards $0.50 plus with macro targets sitting near $0.65 plus. And that's just the technical roadmap for HBAR. For XLM, legendary trader Peter Brandt spotted a tightening symmetrical triangle. His words were clear: if this breaks up, it targets $1.51. Not a meme, not a wish, a real setup from a seasoned veteran. After a 100% move in early July, XLM has been coiling up, consolidating in the 43 to 45 cent range. The resistance at 46 cents is a psychological and technical pivot. If XLM breaks that level with volume confirmation, we're not just talking about a move to 52 cents, we're potentially entering price discovery for the next macro wave. When Peter Brandt calls a target, the smart money listens. Both HBAR and XLM are flashing green. People love to joke about XLM being old or HBAR being boring. They prefer the shiny new meme coins, the 1000x gambles. But guess what? So is gold. So is Swift. So is Visa. What if this old coin misconception is about to backfire spectacularly on the uninformed? What if these perceived weaknesses are actually their greatest strengths, allowing them to quietly build a global dominance that few even realize is happening? And why is this silent, methodical approach the very reason you better see this right now to truly understand their long-term value? Because while the market is distracted, the real work is being done. Stellar has spent the last 2 years building in silence. Soroban, its smart contract platform, isn't trying to be an Ethereum killer. It's what Ethereum was supposed to be for institutions: smart contracts with performance, safety, and regulatory compliance baked in. No gas fee volatility, built-in metering, and a WASM-based virtual machine that allows real applications at scale. Palago Labs is already running a real-world DeFi platform for global trade finance on Soroban, serving freight forwarders and financial institutions across Asia and Europe. This is what real blockchain for business looks like. XLM is becoming the default smart contract rail for compliant tokenized finance. Hedera, meanwhile, boasts legally binding, decentralized, but accountable governance through its council. That's why banks and government projects are choosing Hedera when they need compliance, speed, and security. In a world moving toward on-chain finance, HBAR is the quiet giant nobody saw coming. When you're the backbone of real systems, you don't need hype. HBAR and XLM are not just surviving, they are quietly dominating, and that's why you better see this. We're entering a new phase of the crypto market. Bitcoin dominance is stalling. Ethereum Layer 2 congestion and gas fees are pushing institutions to look for faster, leaner solutions. The macro backdrop, interest rates peaking, inflation cooling, capital unlocking, means liquidity is looking for the next narrative. What if this isn't just a shift, but a great migration of serious capital away from the noise and towards networks that actually do something? What if HBAR and XLM check every single box for this next wave of institutional money? And what if recognizing this migration now is the single most important thing? You better see this to capitalize on before the window slams shut. Wall Street's new obsession isn't meme coins, it's the tokenization of everything. Central banks are testing CBDCs. Every asset manager is talking about real-world assets on-chain. Do you think the big players are betting on speculative tokens? No. They're betting on rails, on infrastructure, on chains that already work. That's Hedera. That's Stellar. They check every box: utility, governance, enterprise adoption, regulatory compliance, scalability, fixed transaction costs, and energy efficiency. They are the quiet, reliable workhorses that institutional capital needs to move trillions of dollars. When you see HBAR break through these key technical levels, or XLM surge past its long-standing resistance, know this: it's not just technicals, it's not just sentiment. It's everything converging at once. This isn't some random altcoin pump. This is a strategic ignition, and HBAR and XLM have just flipped the switch. Every cycle, the same story. Altcoins explode. Most people hesitate. They freeze at resistance. They sell too early. Or worse, they wait until it's too late. The easy gains are gone. What if the window of opportunity for HBAR and XLM is open right now, but not for long? What if the convergence of institutional flows, AI forecasts, and real-world use cases means that by the time mainstream headlines scream about their success, it'll be too late for you? This isn't hype. This is your last, urgent warning to better see this and act with intention. If you hold HBAR or XLM, you're not early, you're on time. And timing is everything in crypto. The window is open, but it won't stay open forever. You have the data, the roadmap, the signs, the flows. Institutions are already moving in. AI models are front-running human emotion, and use cases are accelerating faster than anyone expected. So, ask yourself, do you have a plan for when HBAR hits 35 cents or 50 cents, or even higher? Are you ready to scale if XLM breaks 46 cents and rockets to 60 cents or beyond? Do you know where your exit or re-entry zones are? Don't just hold. Understand what you hold. Don't freeze. Don't hesitate. This time is different. We've painted a bullish picture for HBAR and XLM, backed by solid fundamentals and institutional movements. But what if a broader macroeconomic downturn hits the entire market, a black swan event that no one predicts? What if global interest rates, stubborn inflation, or geopolitical instability throw a wrench into even the most promising crypto projects? How do HBAR and XLM fare in a bear market? And what urgent steps do you better see this to take to protect your portfolio, even if the storm hits? The answer lies in mastering the art of resilience. While no asset is immune to a severe market downturn, HBAR and XLM possess inherent resilience due to their deep-rooted utility. Unlike speculative assets that crumble when hype dies, Hedera and Stellar are solving real-world, multi-trillion-dollar problems for global enterprises, governments, and financial institutions. Even in a bear market, businesses and institutions will still need efficient cross-border payments, secure tokenization platforms, and reliable infrastructure for CBDCs. This continuous fundamental demand provides a strong floor for HBAR and XLM that many other cryptocurrencies lack. Their focus on regulatory compliance and enterprise-grade solutions makes them appealing to smart money seeking stability during volatile times. Therefore, while no one can predict the future, holding assets with genuine utility like HBAR and XLM is your best defense against market shocks. Their deep integrations mean they are more likely to weather storms and recover faster. You've seen the silent takeover. You understand the enterprise demands, the AI forecasts, the CBDC and RWA integrations. You know why HBAR and XLM are no longer just speculative plays, they are strategic infrastructure. This isn't some random altcoin pump. This is a strategic ignition. The market is maturing, and capital is migrating. If you hold HBAR or XLM, you better see this as your moment. You are at the forefront of a fundamental shift in how the world moves money and assets. Don't just hold. Understand. Act. The window is open. Your due diligence is done. Now, it's about execution. The opportunity to be truly early to a global financial revolution with HBAR and XLM is here. Will you seize it with intention, or will you let it slip away like so many others? You now have the critical insights. You've been warned about the pitfalls and enlightened about the immense potential of HBAR and XLM. Your mindset has transformed from passive holder to empowered strategist. But the journey in crypto is always evolving. To truly master your portfolio and stay 5 steps ahead of the market, you need to understand the next set of catalysts. For an even deeper dive into advanced profit-taking strategies and identifying other overlooked infrastructure plays, you need to watch our next video. Click on this video right here to continue building your knowledge and protecting your wealth. Don't just chase hype, front-run fundamentals. Hit that like button, subscribe, and turn on notifications so you never miss another critical insight from Crypto Apple. Because here, we don't just talk crypto, we empower you to thrive in it. See you in the next one.